All right, hello everyone, and welcome to another edition of our newest video series, our stock market update, trying to give you insights on what I'm seeing in the stock market. Again, it's a near-term outlook here, so always keep that in mind, trying to give you intakes of what's going on in the economy, what are some stocks that I'm liking, what are some stocks I'm watching, and just purely just giving you an update on what I see. So thank you so much for every single one of you that gave comments on our new video last week, showing how much appreciation you had for it, how much you loved the format, and I think you're going to love this week's even more because try to do it a little bit more formal, giving you guys that slide deck feel, giving you the feel of that live show, the stock market after hours that we once did as well. But hopefully, trying to check off the same boxes. So if we get to the slides right now, as you can see, here's our stock market update that we have right now. Let's start with performance. Where has the stock market been over on a year-to-date basis? We have the Dow Jones up a little over 9.5%. S&P 500 sitting at roughly 14%, and the NASDAQ slightly over 16.5% thus far. Speaking of the 10-year Treasury, just a notch below 4% at 3.96% is the time of this recording. U.S. oil just a tad, few cents below $60 per barrel, and Bitcoin sitting at 107,810. Again, Bitcoin's been a little bit more volatile. In recent weeks we've seen it, a little over 120,000 around there, and then sitting in this low 100 to 110,000 range is really where we've been seeing Bitcoin. So the volatility's been there, but it really has just been going in a short range back and forth there. In terms of sector performance, you can see this is filtered out on a year-to-date basis. We have at the top communication services, followed by information technology, utilities, and industrials. When we think communication services, this is again going to be the likes of the Metas and Alphabets at the top, and then info tech can be anywhere from your NVIDIAs to Apples to Microsofts. Utility sector, and then industrial. So we really have four sectors right now that are outpacing the greater S&P 500 index, which again is sitting right around 14%. But the thing to note there is when we look at all 11 sectors, they're all in the green, and that's a good thing. It's very different from what we've seen back in 23 and 24, where it was really the Mag 7 just carrying so much of the weight and the outperformance of the S&P 500 that you would think, oh, there's got to be so many companies that are doing so great in those particular years, and that just simply wasn't the case. So although those Mag 7 companies, for the most part, the NVIDIAs and Microsofts of the world, Google's, continue to do pretty well. But there's also a longer list of other companies that are doing quite well here in 2025. As you can see, again, all 11 sectors are in the green thus far. When it comes to the Fear and Greed Index, last week's video, again, we barely touched into the extreme fear range. Today, we're right on the cusp there, technically in the fear level at a rating of around 26. But again, for us long-term investors, again, I'm a long-term investor. I'm not a day trader by any means here. We are looking for good entry points. That's how we build wealth the right way, buying high-quality assets at great valuations. Does that mean we time the exact bottom? No, we're not looking to time the market at all. We're looking for time in the market over trying to time the market here. So when the fear levels are higher, that usually can ramp up volatility. So there's, doesn't mean we go all in, because there's a lot of pressures that are coming on us from a macro environment. We have valuation from a market-wide perspective. What's the thought of tariffs impacting inflation? Is inflation going to continue to creep higher? And if inflation creeps higher, how much more can businesses pass on to the consumers? If they can't pass it on to the consumers, it's going to hit their bottom line. We're going to get updates on just how well companies are doing now that we're in the earnings season. We're just at the start of the earnings season. Again, we've had a number of companies already report, so we're getting some tells so far, but there's still a very long list to go. What's been in the news of late? Well, some of you probably have heard of Amazon's AWS glitch that they had just the other day. AWS went down for a good period of time, and it knocked off a number of companies, internet and things like that. It was a massive outage, but it also showed, there's two different ways to look at it. You could say, man, Amazon screwed up. This is going to kind of be a black eye on their track record. But at the same time, number one, the stock didn't really fall. In fact, it ticked a little bit higher on the day it happened. So the stock's been falling of late. So that could show that maybe the bottom is in, one way to look at it. But the other way to look at it is to see just how dependent in this modern day with many large cloud providers, not only Amazon with AWS, but you have Microsoft's Azure, you have Alphabet with their Google Cloud as well, all three major players in the cloud space. But how dependent big companies are on the likes of AWS. We have Q3 earnings. Obviously, those are in the news. We had Netflix and Tesla, some major companies, IBM. The big banks started things off last week. In the week prior, we had the likes of an ASML. So we've got through a number of companies already that are kind of giving us a tell on, number one, how are they doing? Because we've had a huge run-up in the past quarter. Now we have to see companies back it up. Was that run-up worth it? Or is the company doing even better than what that run-up was, and there's plenty of room to continue going? Or do we need that pullback that many of us fear? And then also in the news is the likes of Alphabet's Google versus the likes of OpenAI, which seemingly seems like they're just taking over the world these days, but they just recently launched their own search engine type, which is pretty much going to be the closest competitor. Even the likes of Microsoft tried to even just try and get a piece of that search business, and they were unsuccessful with Bing there. Alphabet has dominated this. They have the two largest search engines, in fact, not only with Google, but also with YouTube, where you're watching this video here right now. OpenAI with their latest launch could be looking to take a little bit of that piece of the pie. Now, I think there's plenty of room for both of these companies, so it's not an end of the road for the likes of Alphabet. It continues to trade like a value stock, but it performs like a growth stock. So that's going to be something close to watch, and maybe some opportunities for some dip buying there, just in my opinion. So touching again, though, on the Amazon oops is what we call it. In my Discord community, the Stock Investors Edge. And again, if you're not yet part of that, it's free to join. We have a full Discord. There's free sections where you can join. There's also paid ones. We have the Edge Plus, where you can get access to my entire portfolio, trade alerts, what I'm buying, what I'm selling, stock deep dives, in our weekly Edge report. But the Amazon oops there was just a simply routine software update. This sounds very eerily similar to that of CrowdStrike. Now, CrowdStrike, after theirs, the stock fell a ton, and I bet a bunch of us are kind of hitting our heads on the desk saying, man, I wish I bought more, or I wish I bought it all on that dip, because CrowdStrike has recovered and more there. I think it's very similar to what we're going to see here in Amazon, but of course we're not getting at least not yet, we haven't got the sell-off, the repercussions from it like we did with CrowdStrike, which again, I can view that as a positive sign. But there were airlines and banks that were out. My Alexa wasn't working here in my house. Who knows what we could do? I didn't know what the weather was outside. I actually had to go outside and do it the old-fashioned way. Slack, Venmo was down offline for hours there, but for the most part, they got things back up and running by midday there. There were some companies that were impacted a little bit longer there. But speaking of Amazon, let's just take a closer look at it. Taking a peek here at the charts, you could see the RSI up top. All these colorful lines that are going throughout here, those are moving averages. So we have the 50-day with the yellow. The dark purple is going to be the 200-day. So that's one that I'm paying really close attention to, because if you look back at this company, very rarely does this company break its 200-day moving average. Now, when did it? Well, last time was back, in April, when we had the tariff tantrum, when everything seemingly fell. And again, another point in time where we all said, I wish I bought more at that point in time. Stock quickly recovered there, but here we are. It recovered back then. It recovered again a few months ago, and now we're kind of battling that 200-day moving average again, which is proven to be a good time to buy. I continue to think Amazon is a great value here, but some of you may want to be a little bit more patient. Some of you may want to earn income. Some of you may want to utilize options, and that's why I continue to stand by this particular option play. This is the one that I covered on a recent video, investing $100,000 into a single stock. It was on Amazon covering this particular put option. So if you didn't yet get into that, you still can, because you still have roughly 30 days till expiration. That $200 strike ending on November 21st can earn you $3.55. Put that into real dollar terms, that's $355 per contract. So one contract, you can generate $355, and that puts you on the hook saying, hey, I will gladly buy Amazon if that stock price does in fact drop below 200 over the course of the next 21 days. I have no issue buying Amazon at a price tag at 200. Will that be the exact bottom? I don't know. We could go down to 180, but doing my homework right now, I have no problem buying this particular company at $200 if it in fact gets that low. So we'll have to wait and watch over the course of the next 30 days. We'll take a break here in the middle of this to kind of tell you about an upcoming webinar. It's actually happening today, October 23rd, 8 p.m. Eastern Time, 5 p.m. Pacific. It's our earnings season market update. A lot of great news that I'll be sharing, in-depth news, and the great part is it's free to join. There's no cost here. Free to join unless you're unable to join us for the live show and you want to watch the recording. Again, this webinar is not going to be posted onto YouTube. There is an option to purchase the recording. You'll get a copy of my book, a few other resources as well. Just $27 there if it's something that you want to join. But if you are able to join us, it is a free event. We'll be diving into my expectations for the rest of the year. Which sectors am I looking for to outperform the rest of the year? Give you my price target on the S&P 500 moving forward, and also look at a few options. Options to hedge your portfolio, options to get a little bit more aggressive, and some options to earn some income as well. So kind of giving you a mixed bag there overall. This is going to be a webinar you don't want to miss. And again, the best part of it is it's free to join. And again, if you want to join this webinar, there's going to be a link down in the description below. You click on that link, enter your email, and you'll get all the information to be able to access that event at 8 p.m. Eastern on October 23rd. All right, let's take a look here at the chart update. So this is going to be for the S&P 500. You could see that we've kind of regained our positioning in that kind of upward trend that we've been going through. We're kind of in the lower half of that red section being there. But the thing to take note of is, again, that yellow line there is that 50-day moving average. It's almost moving in lockstep with that lower support level there. I always like to see when investing is if I kind of build my own support level, but then I see something else that's there, whether it's a Fibonacci level, whether it's a moving average, that's kind of right along that same level, that gives me a little bit more confidence, because not only do I have the support level that I believe is there, but I also believe that based on another, whether it's again, a moving average, a 200-day, a 50-day moving average, a 100-day, a Fibonacci retracement, whatever the case may be, that just gives me a little bit more confidence. So as far as we could drop here, I'm looking at that 6,600 level, again, in the near term as being a great opportunity to jump in. Not just S&P 500, but a number of different stocks as well. And we'll be talking more about those stocks I'm watching in tomorrow's webinar. So again, more purpose to join the webinar tomorrow. Again, we are in the thick. We're still in the early parts of earnings season, but we are in the thick part of it. Not only this week, but next week is huge. And then the following week is massive when we start getting into even more of those Mag 7 companies. We've now gone through Netflix and Tesla, IBM as well. This morning we get American Airlines. Honeywell is one I'm going to be watching closely. We get Southwest, and then tonight we get Intel, Newmont, Alaska, Ford, and then on Friday to close the week we will get Procter & Gamble as well as General Dynamics too that I'll be watching. On the right side there, that's our Stock Investors Edge earnings calendar. So for any of you that are Edge Plus subscribers, you get a write-up for each of these companies, all the companies that we follow, and these are going to be the main ones that you'll be getting on Friday. So Coca-Cola, Lockheed, General Motors, Netflix, Tesla, IBM, Lam Research, Intel, and Procter & Gamble for this particular week. In terms of economic news, again, there really hasn't been much economic news, largely due to the government being shut down for the past 4 weeks. But on Thursday, we are expected to get existing home sales month over month. And Friday's the big day when we're expected to get CPI, the latest reading on inflation. How much are these tariffs impacting? We've started to see it last month. Is that going to be a continuation? And the expectation is that we are going to surpass 3% on CPI year over year, going from 2.9% up to 3.1%, but staying flat overall on the core CPI there. And then down below, you can see we're also expected to get that University of Michigan Consumer Sentiment Report, which is largely going to stay the same as it was last month there. So again, as a reminder, we'll have our earnings season market update. That's going to be later today, 8 p.m. Eastern time. Again, completely free webinar, tons of great nuggets to give you guys more looking forward towards the remaining of the year, less about looking back, although we'll look at a few earnings calls and things like that of some takeaways on companies that have reported thus far, but giving you my expectations for the rest of the year, sectors, stocks to watch, and option plays to consider as well. So check out that link down in the description. Again, if you're not yet part of our newsletter and our Discord community, there's a link down below as well. You can choose Edge Plus or Options Edge Plus. We even have an Ultimate Edge Plus, which will cover everything that we have to offer. But again, Edge Plus is going to be more geared towards my portfolio and specific stocks and ETFs. Options Edge Plus, as you can imagine, is all focused on stock options. So when I enter, when I exit particular options, you can check all those out, and we have our own chat room there. So again, I hope you guys enjoy this new series that we have going, this stock market update, just kind of giving you a near-term high level on what's going on in the market. What are some big newsworthy events? This week we had AWS. Obviously, earnings are newsworthy as well. But also just trying to keep you guys in the know from a high level perspective on what's going on. So again, continue to let me know in the comments what you think of this new video series. Do you want me to continue these moving forward? And again, if you find any value in this video, show your appreciation by just clicking that like button down below. Subscribe to the channel, and hopefully we will see you at that free webinar tonight. All right, folks, take care.